Well, it's just ugly out there. I mean, everything is red and just in free fall, and the Fed hasn't even started raising rates yet. The supposed winners when the Fed raises rates, like bank stocks, look like huge losers too. So is this the start of a stock market crash or even a complete meltdown? I mean, why else would bank stocks lose so big so fast? Should you just sell and hide completely? Well, I will answer every one of those questions with the truth without the hype, and I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do. And are you against having a team of investors, including me, working directly with you as we navigate these crazy times? If not, then you need to know the sale ends in just a few days to join the Market Insiders private group, and the prices will never be this low again. You get full and direct access to me and a group of 6- and 7-figure investors, and you get access to 4 courses for free that teach you how to plan, do evaluation, build up your cash, and you get to see my watch list with price targets, my buy and sell alerts, live weekly Q&As, and exclusive videos, and a ton more, so just check out the pinned comment. And before blasting me for promoting it, I have no ads, no sponsors. This is what YouTube pays me in a month, and I give half of that and half the group's proceeds to charity. All right, so let's address the bank stocks first, since they've been reporting earnings, end of last week, beginning of this week. Then we will get into the juicy stuff with the sea of red that appears to be a tidal wave that's just getting started. Now, everyone in December was basically telling you to buy bank stocks, right? I mean, they were the hot play when the Fed said that rates were going up this year instead of the following year. And as it's becoming clear that more bank rate hikes are coming than previously hinted at, bank stocks and banks in particular stand to profit big from this change in interest rates. Anywhere from 60 to 75%, and in some cases more, of their income comes from interest, kind of depending upon which bank you're looking at. Higher interest rates means that they will be able to increase their spreads, and it will mean higher income. But bank stocks are getting crushed anyway, so let's look at an example and see what the heck is going on. JP Morgan had dropped from the 170s into the mid 150s in just over a month before the announcement, and kind of the hype started for banks. And I'm referring to the Fed announcement. I'm sorry, I should have said that. Then it quickly shot up to almost 170 over the next 3 weeks before their earnings call, and now it's flirting with going back under 150. What the heck is going on with that? Well, first, the original fall had everything to do with valuation. JP Morgan got too hot and it was just simply cooling down. The time to buy JP Morgan on a discount was last year at this time, and it basically just ran up too fast and was cooling off, after that period of run up. And it again was off and running after the Fed made it clear rates were going up, and the hype cycle started again before Friday, where they had an okay earnings call but warned that expenses were going up because of inflation, and that was one of the main drivers for it falling. When they elaborated on that point more, they said higher wages to retain talent was the main driver. Let me translate that for you from a guy who has owned these type stocks for years. Inflation and wages going up is the current narrative, right? So basically they're saying, let's inflate ours as well. If you think they're seeing expenses rise significantly because they have to pay the employee who was making $12 an hour, $15 an hour now, you are sadly mistaken, my friend. When they say their expenses are going up because of increases in pay to retain talent, it means large 6- and 7-figure bonuses, maybe even more, that can be given out and easily justified in these high inflation times. Come on, you're going to give bankers a chance to basically raise their pay without any real scrutiny, and they're not going to jump all over that? So will banks actually be the winners? Well, the answer is yes, they actually will. But remember, the hype cycle started in Q4 of last year, but they will not see the benefits in their bottom line from all the rate raises until Q4 at the earliest of this year, maybe Q3, but most likely Q4 of this year. So basically the hype run started a full year before they were ever going to see the benefit. Yeah, the stock market is forward-looking, but it's not that forward-looking. So is this basically the start of a market meltdown then? Well, I would say it's the start of a much-needed correction in large caps, and I'm not sure they're going to fully crash or not, but a correction is absolutely needed. You cannot be at historical high valuations and not expect a correction at some point, whether that be in a 6-month or a year of choppy sideways trading so valuations can kind of catch up, or an actual 10% decline, in the actual stock price. And if you own small caps, well, that was a much needed correction that actually started last year too. Now, I'm sorry, I know it hurts, but there wasn't a single small cap stock, or very, very few, that could justify the valuations they had at this time last year. But unlike large caps, small caps tend to run up big and fall big as well, and that's kind of the journey of a small cap stock. But I honestly don't see massive downside from here, but that doesn't mean there's not going to be some pain either. So should you just sell and basically run away and hide until this all kind of sorts its way out? Well, honestly, I can rant for another 5 minutes about the answer to that question, but I do respect your time, so let me give you a quick visual and a question that illustrates my thoughts perfectly. Which one of these lines is the narrative in the media here on YouTube or anywhere else? I would say it's not the huge line of people at stocks at all-time highs, but the fear and stay away narratives that has nobody in line when stocks are actually cheap. But that is the best time to buy stocks, when nobody is in line, even though it hurts in the short term. So I'm going to continue to strategically buy stocks as those stocks hit my price targets. I made every price target without the emotions of a potential market crash or deep red days and, basically negativity being at all-time highs. So I know I am in deep discount country right now on many of them, so I'm not selling any of them. Instead, I'm buying. And you can see my price targets for every stock I want to buy in the group, so don't forget the sale was just extended a couple of days to join, so at least check it out and see what you get. Alright, enough of that, I'm sorry. Comment down below and let me know if you think this is the start of a mega crash. Are you buying more? Are you holding? Or selling and going home? No matter what your answer is, I'd love to hear what you think. So thanks for watching, and we'll see you in the next one.